Okay, thank you. So today's topic is fantastic. We are going to talk about real world like asset tokenization, securitization, and monetization. And then I will share my screen to introduce of the today's topic and speakers and some overview. Hopefully you can see my, okay, so to better view, I will share slide share. Okay, so we have three speakers today, including me. So I will introduce briefly about our schedule. So I will give you this introduction. And then after that, we'll have a general overview of the real world asset tokenization and other topics by Jeff Gustafson. He's a leader, a global leader in this topic, and he's a founder and principal at Makai Advisor, and then he contributed a lot about this topic in Forbes magazine. And then after his talk, and then we'll have a fascinating topic is a real estate. So Laura Hamatian, she's an expert in real estate space. So she will share her experience and insight about this fascinating topic. And then I will cover, because I have a tour today. I'm a moderate, and then that's for my consulting company. Tech IFM is for the strategy consulting company that and also have a additional job to have this fascinating solution for patents, intangible asset. So I'm going to talk about what is meant by the tokenization, securitization, monetization of patents, and then introduce some specific solutions that I work for this company, IPV. And then we have a general discussion and Q&A. And then during the session, actually you can, if you have any specific question, you can use your chat, and then you can specifically ask a question to some specific speaker, and then he can give you answer during the session, or the question is left over and I will take care of it. And then we will have a separate discussion after the whole talks. Okay, so without any delay, I will give you some introduction. So I just summarize this, but I think that most topic will be covered by Jeff. So I will ask him to cover everything. But I already share, and then I'm going to share this one so you can look at it. I tried to summarize this topic in one page, but there are so many topics. You have a lot of things in here. But anyway, I did my best. But I think that the one thing that very important thing is that is a BlackRock is like a world top asset management company CEO mentioned about this asset tokenization is a future of these financial sectors. And then if you're attending to this webinar, you will be in a part of this global effort, that it will grow up to 16 trillion opportunity by in several years, right? So this is a fantastic topic. And then you will hear from Jeff about what is meant by the tokenization and what will have an opportunity like a link with the securitization and how we monetize it. And I want to introduce the motivation actually that I designed this one, because that the one of the asset tokenization is related, we call security token offering is the STO. And then many of you already know about it because in the US it is normal. And then, for example, I tried to introduce this STO 3 years ago in South Korea. At the time, even in the United States, it was started to move into the mainstream, and try to that. But actually, the problem was the problem with regulation. So was not permitted in the government. So actually that's why that I tried it, but was not successful. And then after that, actually, that what happened is that this year, that South Korean government finally decided to permit this topic. So I summarized this one I already share you, but you can look at it. And then this year there will be some kind of like a sandbox type innovation, like a type to permit. So there are a lot of the activities going on. So if you are interested in opportunity in this kind of like a token securitization in South Korea, I already did several webinars to the South Korean audience, and I have a lot of link with some of the key players in South Korea. So if you're interested, particularly they have a different like legal scheme, and then most of the topic they are interested in is a platform. So it's they are rare in like it's all kind of like ST was not permitted. So other legal matters and other like practical ways we can have it, but especially they are interesting is like what we experience in globally, especially in the Wall Street, and then they are interested in what kind of platform they should develop. So if you want to collaborate with me, then just let me know after that. Okay, so then I will cover later about this what is meant by the patent tokenization. So I will stop here, and then I'll pass over to Jeff about the fascinating topic. Jeff?
Thank you, Alex. Hello and good afternoon, everyone. My name is Jeff Capison, and I've spent my entire professional career telling stories. My first job after college was leading naval flight missions around the world. During those missions, I would gather information in order to paint a battlefield picture for other aircraft and units. I left the harrowing world of military aviation for the safe confines of Wall Street just 1 month before 9/11. There, I joined the vaunted Salomon Brothers Associate Training Program and subsequently sold and traded mortgage and asset-backed securities on the fixed income trading floor. Like my naval aviation career, my mission was to gather and assemble disparate pieces of information, relay the full market picture so that my clients could form an educated portfolio management thesis. Oh, and in between those conversations, I would try to sell them bonds to execute upon that thesis. When the fintech revolution of 2014 started, I co-founded and became an operating executive in early stage and growth fintech companies, running corporate and business development and forming go-to-market strategies for my firms. My most recent work focused on helping a company serve legacy financial institutions bridge the gap between blockchain and digital assets and traditional capital markets. I was given the opportunity in 2020 to tell stories that educate and inform people about complex, innovative concepts through my Forbes digital assets and fintech columns. As always, my end goal is to inform my audience so that they may choose the appropriate calls to action in their own businesses. During a recent conversation with Morgan McKinney, CEO of the Provenance Blockchain Foundation, she asserted that 2022 marked the first year of true institutional adoption of blockchain technology in core business use cases in finance. While the exploits of crypto players like Terraform, Three Arrows Capital, and FTX tarnished the reputation of the crypto industry and dampened retail crypto participation, institutional giants invested heavily in digital assets infrastructure. Bank of New York Mellon, State Street, and NASDAQ have all stated their intent to develop digital asset custodian capabilities. For financial assets, the concept of custody is core to any trading and fund management operation. Bank of New York Mellon alone touches 20% of the world's investable assets. Do a Google Trend search and you'll see that over the last few months, the tokenization of real-world assets has become one of the most talked about phenomena in the digital and capital markets today. Truth be told, ETF and mutual fund managers WisdomTree and Franklin Templeton have been developing tokenized or on-chain funds since approximately mid-2021. Starting with the least risky, most liquid assets, short duration US Treasury bonds, the companies offered tokenized funds direct to consumers via wallets formed through WisdomTree Prime and Franklin Templeton Benji applications. By the end of 2022, Apollo and Hamilton Lane tokenized private fund equity participations, and at the New York Times Dealbook Summit in December, BlackRock CEO Larry Fink said that tokenization will be the next generation for markets. According to a digital assets report, 14 types of institutional digital assets have been issued thus far, ranging from bonds, syndicated loans, private equity participation, and private carbon credits. In a far-reaching interview with Mike Cagney, CEO of Figure Technologies, we discussed the partnership between NovaWolf Digital and Figure to tokenize public equity. Via tokenization, Celsius earned customers who, unbeknownst to them, would become creditors, not depositors on the Celsius platform, would have the opportunity to monetize their ownership in a new co that would manage the remaining assets for the Celsius estate. For NovaWolf, it gave them an avenue to permanent capital without the disruptions of investor or lack of liquidity as investors pulled or redeemed their funds. For Figure in the markets, this unique opportunity accelerates the roadmap toward greater mainstream adoption of tokenized assets. But perhaps the most interesting application that I've seen to date has been the application of tokenization to intangibles. Intangible assets consist of things like goodwill, trademark, copyrights, brands, and patents. As the name implies, it can often be difficult to describe, much less monetize, the value of said assets. This difficulty can lead to challenges and inefficiencies in the valuation and negotiation of licensing and outright sales. There are companies, however, that are utilizing the blockchain, distributed ledger technologies, and tokenization to do just that. In January, US-based IPW announced they had tokenized the publicly available data to over 25 million existing patents. Patent NFTs give businesses a tool by which they can more efficiently value and monetize some of their most valuable assets. According to research produced by Ocean Tomo, an IP-focused boutique, roughly 90% of the market value of the S&P 500 is derived from intangible assets. Yet, intangible assets, like patents, can be costly to negotiate. According to Leanne Pinto, president of IPW, transaction costs can range anywhere from 5 to 30%, averaging between 10 and 20% of total deal value, and can take months to negotiate. For large cross-licensing deals, that timeframe can expand 1 to 2 years. For deal participants, much of that time is spent in price discovery and unbillable hours due to the current opacity of the market. Tokenization can make that process more efficient. Tokenization and tokenized assets share much in common from the securitization background and securitized products background from which I came. In fact, it's my belief that the similarities are at the core of what will drive tokenized assets as the next evolution in the crypto journey. Securitized product investors know that collateral is the key to valuation. Investors use established metrics to drive those valuations and form a fully formed, mature market that has evolved around that process. While those valuations and points of view may differ, cogent, actionable negotiations can be conducted thousands of times a day. The allure of tokenized assets is that, like securitized products, they will most likely be valued on widely accepted valuation methods of those underlying collateral, including the ability to generate current cash flow, their exit value at the end of the financial contract's tenor, or a combination of both. Tokenization represents an evolution of the efficiencies generated by financial engineering and financial technology. So what exactly are those efficiencies? 1, eliminating risk. For issuers and buyers of tokenized financial products, the use of the blockchain enables point-to-point or wallet-to-wallet issuance, which eliminates the risks around settlement delays. In January, the European Investment Bank issued a £50 million sterling bond that settled T+0, or what is known in market parlance as cash settled, versus what can typically be a 7-day closing period for new issue fixed income securities, introducing balance sheet risk and counterparty risk over that short time period. 2, direct investor engagement. WisdomTree and Franklin Templeton utilize WisdomTree Prime and Franklin Templeton Benji to transact directly with their clients via their digital wallets. The immediate effect includes the disintermediation of middlemen like wholesalers and brokers, but innovations in the future could include the creation of custom assets or trade baskets based on the investor's risk appetite and the asset owner's need for liquidity. In the IPW example, companies would be able to more effectively manage their patent portfolios with better understanding of what they own and how it could potentially be monetized. 3, Fractionalization. While the concept of fractionalization may not be new, Robinhood marketed this concept to perfection with its millennial audience in 2020. Tokenization allows for expansion of this concept to more and more asset classes. An example raised by Morgan McKinney, tokenization could be utilized to fill a $15 to $20 trillion funding gap in infrastructure lending. That's trillion with a TR. This $93 trillion market has been traditionally underwritten by banks because of their complexity, size, and long duration of the deals. Tokenization provides issuers and underwriters the ability to carve out portions of these deals for investors with long duration needs, like endowments and pensions. 4, automation. As tokenization of assets evolve, the use of smart contracts to automate cash flows, be they dividend payments, coupon payments, and perhaps even future flows, will open further efficiencies for companies in their capital market operations. This growth does not come without questions and risk, however. For financial assets, one of the biggest challenges could be the market's perception of basis risk or a mismatch between tokenized assets and legacy forms of similar assets. It is conceivable, however, that the evolution of the technology and the supporting regulatory, legal, and accounting framework will eventually lead to native on-chain issuance and resolve the challenges posed by digital twinning. Digital twinning is less of an issue for non-financial companies that may create whole product lines that marry digital twins with physical goods. It is known that in addition to memorabilia companies like Topps or NBA Top Shot, luxury goods manufacturers like Hermes, Chanel, and others are pursuing NFT strategies in combination with physical product lines. While we can't be certain about the exact trajectory for tokenized assets, the involvement of marquee financial brands in their development, while regulators take a harsh stance on crypto, points to an evolution in the way crypto will be used and perceived. DLT and the use of blockchain in finance and corporate operations will open up valuation and monetization opportunities for asset managers and non-financial companies alike. For investors, it opens up a number of asset classes that may not currently be able to access. And this is where I believe the largest opportunities lie. Like intangible assets, debt restructuring claims, and infrastructure deals, the common thread lies in the friction incurred in the structuring and negotiation of deals and transactions currently in these spaces. Tokenization opens up the possibilities for more efficient deal flow in the very near future. Thank you, and I look forward to watching this story unfold with you all.
Thank you, Jeff. Wow, it's a great topic and great insight. Thank you for sharing your experience of this space. Yeah. It's a fascinating in 10-minute summary of the horoscope. Wow. Okay, so if you have any question to Jeff, then you can use your chat and then leave your question, and then Jeff will look at it and then he can give an answer. Or if you left over, then I will take it in the later discussion session. Okay, next is Laura. Laura will talk about the real estate.
Thanks, Alex. I mean, Jeff, that was amazing. I don't even really know how to follow that. Really amazing job on the overview. And Alex, thank you for having me. My name is Laura Pamatian. I am the founder of Height Zero Real Estate. I have been in real estate and development for 20 years. I started my career in general brokerage, and then I niched into luxury pre-construction hotel branded resort real estate. So Ritz-Carlton residences, Mandarin Oriental, Auberge, Fairmont, Grand Hyatt. I ended up in the Caribbean on several of those projects. And long story short, 12 projects later, end up here in South Florida. COVID hit and I had time on my hands, and I've been learning a lot about what's happening in blockchain for a while. So I spent a lot of that time learning about how it was applicable and affecting real estate. And I decided very quickly after diving in, and I dove in pretty deep, that I would pivot into the space, knowing that it was going to significantly change the space in a very, I think, in a very quick time frame. So now I advise and I work with real estate owners, developers, syndicators, real estate companies to implement AI and blockchain into their real estate projects. I have been I've been working on several projects at this time, and I think what we'll talk about today mostly, I don't have a very formatted script, but I think the most applicable topics for today would be the tokenization for real estate and the different types of tokenization that's happening in real estate. So first, there's different types of tokenization. We should probably understand that part first, because a lot of people don't realize that there's utility tokens that are used in real estate. There's non-fungible tokens that are used in real estate. There's the tokenization of securities that are used in real estate. With non-fungible tokens, NFTs, the application for that has been in the transfer of real estate title. So transferring the real estate in its entirety from one owner to another. And that's happening not only in the residential space, but also in the commercial space. The way that happens is, and as Jeff mentioned, tokenization makes a lot of the processes much more efficient, reliable, transparent, etc. And for what's happening in the real estate sector, the traditional way that we transfer real estate takes months of time, right? It usually takes 30 to 60 days. If we're talking about commercial real estate, it could take much longer. With the way that the NFTs are being structured for sale, it really it kind of reshuffles the process, right? All of the sequencing of events that happen in real estate. So from the offer to the inspections to mortgages, etc., all of those things that are happening over that 30 to 60 days are completed in advance. So when the property is ready to transfer, it's transferring in its entirety in a few minutes of time. So all of that due diligence is provided to the public, to the buyers. The buyers can inspect and do their due diligence on the real estate. And all of that information is bundled into an NFT, and that NFT is how we're seeing it now is put to auction, and the highest bidder wins, right? So there was a property recently in Tampa just last year that the transaction was completed by a company called Proppy. And I know seeing very familiar names on the webinar here that some of you are very familiar with that company. They managed that property and the transfer of that property via NFT. So like I said, all of that happened in just a few moments of time. And the property transferred, and it was settled, and the transaction was over. So that's one application of how tokenization is going to change real estate, and that's really high level. I would encourage you that if you have any questions, even just general questions, please just put them in the chat. I'd be happy to answer them as we go along, or even at the end. As we kind of get into tokenized securities in real estate, there's two different ways to tokenize commercial real estate. Let's just stay specific on commercial real estate. And one is to tokenize the existing shares of the real estate, and to create the option of liquidity for the existing investors. So let's just give you an example. If I have a hotel building, and I have that hotel has been stabilized over time. When I bought the hotel, I had 15 investors that brought capital to the deal. And now, 2 or 3 years later, the asset is stabilized and functioning, and the owners are looking for an exit. And a way to do that today efficiently would be to tokenize those shares. And there's several steps involved to do that, but it is one of the quickest ways. It's probably the fast track to tokenization, is to tokenize an existing asset that's already been funded. And we're going to create the option of liquidity in those shares. So those investors would then be provided their allocated shares, and compliantly, they would be able to sell, trade on a secondary market in order to provide themselves the liquidity, right? So that they don't have to stay in this hotel deal for 5 to 8 to 10 years or whatever maybe the term was initially when they invested. So the application for existing buildings is quite, I don't want to say easy, it's not necessarily easy, but relatively speaking, it takes a few weeks. It depends on the legal documentation of the existing offering and how we can work through the existing structure to make it ready for tokenization. And that's really high level. Another way is through the option of tokenizing securities. So in a traditional capital raise, we can offer a fully compliant, SEC compliant security token offering. That security token offering is would be representative of equity, and we can do this different ways, but we'll speak to equity for now. And let's say we have an asset that, and we can also do this with existing structures, we can do this with new build. And if there's capital that is being raised for a particular project, that capital can be tokenized and the option of liquidity can be provided to those investors. There's a lot of benefits with that. Obviously, as the owner, the issuer is, when you're sourcing that capital, you really have a competitive edge with investors because you're able to give that investor better terms and conditions versus the traditional deals that are out there, right? Traditionally, as an investor, I come to a deal with X amount of capital, let's say $1 million, and I have to stay in that deal for 3 to 5 to 8, 10 years. Okay, with a security token offering and tokenization, as the issuer, I can offer my investor better terms. You invest in my deal, you bring $1 million to my deal, and you don't have to stay in my deal for 3 to 5 to 8 years, right? You can exit in 12 months if you would like, right? And this is really high level, but if they wanted to be able to do that, they would set up their offering so that that investor would have the option to trade in and out of that deal after 12 months. So there's a lot of benefits with tokenizing for a capital raise. One, it can lower the barrier of entry for the investor, right? You can fractionalize the interest so that many investors can participate in the deal rather than just having a few very, highly, maybe accredited investors coming with large amounts of capital. We can lower the barrier of entry to, $50,000, $10,000, $1,000 of investment, depending how, the deal is structured. It allows the owner to still maintain 100% of control of the asset. It adds another layer to the capital stack. There's no, fixed repayment options like you're going to get if you're going to take on debt. You're basically providing economic right to the investors so that they have interest in the building. So if there's revenue that's being generated from the building, they would be provided that revenue through their tokens. If there was increase in value or decrease in value, right, that would also pass on to the valuation of their tokens, and they could sell or buy in time over time. So in a use case, for instance, if I was going to, let's just talk about a real use case. So in Aspen, there was a hotel, St. Regis Hotel, that was tokenized in 2018. There were they were doing a renovation of that hotel. They needed $18 million. They went to their existing investors and they said, we need $1 million from each of you. If you help us fund this renovation, we'll provide you the option of liquidity in a year's time. So you don't have to stay in this deal, locked in this deal for a long duration. So 18 investors came together, provided that capital, and then the owner was able to deploy that capital for the renovation, and those 18 investors were then given the economic right to their portion of interest in that hotel. So dividend payments that were being paid, upside that might exist over time. And after a year's time, some of those investors, and I don't know what the exact number is today, but last I checked, there were over 200 investors. Those 18 investors turned into 200 investors because some of those investors decided to sell their shares. So they were able to exit a portion of their investment, and new investors were able to come in and participate in this trophy asset that they never were able to participate in before. So that would be a use case for a security token offering. I mean, I could probably just go on and on, but Alex, is there anything more specific that we might speak on or have questions about at this point?
I think that you cover almost our topic. Maybe we can discuss further in the discussion topic, but actually you have in mind that because my first STO project 3 years ago was to try to have a project financing of the real estate development in Philippines. So actually I worked with some of the capital in Hong Kong, and then they tried to develop real estate in Palawan. It was they tried to build up some resort space, and then you have in mind you talk about two types, already existing real estate and the under development, right? Because my experience under development. So we maybe clarify some of my interesting, because real estate is somewhat different from others because, for example, security. The reason that's not like a underdeveloped security, right? Because security is just security, right? But in real estate, we can have two types. Actually, you can tokenize whether it's a current or in the future, right? So I think the real estate is in that way is a very, very particularly different topic in spectrum of the in mid of the in liquidity, also a different type of the asset we can tokenize. So we maybe discuss later. But actually, I have something that before we go over my topic. Actually, I'm a lawyer, and then I'm practicing. I'm mostly intellectual property lawyer. So I'm a New York City attorney, but mostly my expertise in technology and then intellectual property, not security laws or something like that. But this is what a lot of people are confusing about, because for example, that I particularly mentioned that securitization and monetization. What's the difference, right? A lot of people are not clearly understand the meaning, because for example, that you have a NFT for art, right? So you have a very, very particular your art, and then you make it digitalized as a token NFT, and you press in for example, there are a lot of the a marketing, a marketplace for NFT, like OpenSea or whatever, and then somebody buy, right? Whether it's a security or not, it depending on the how actually it will be used, right? So usually in the United States, that the security is tested on the we usually call a Supreme Court Hawaii test, and the most critical point is that whether it is a vehicle for investment. The vehicle for investment, investment means that the investors as some group or whatever, that in put in his money under the expectation of that, not his effort, but the effort by others, actually they will get the return, right? So there is a two concept which have a common enterprise. That means that you have like a pool of your asset tokenized, and then people are put their money under the expectation of they will get the return in their investment return. Then this type with the NFT is that fractionalization. You should be very, if you just put your like for you have a tokenized your building, right? And then you put place in your website or whatever marketplace. And then you want like let other people know about it, and rather than just they just looking at your space, and then you have a like a long time of the discussion to negotiate or whatever. Everybody know about you buy a house, right? The person. But if you think about like, for example, like mostly that the development, right? Because it's not under development, right? You want to finance it, right? That means that you want to have some investors to finance your developing project, then it definitely it'll be under like a securitization. But you want to just, you're an individual owner of your house, and then you make your house as an NFT, and then this NFT represent this house, and then you want to place this NFT as like a vehicle to sell this one to other party. It's not security, like it's not expectation. Probably the buyer maybe expectation of the will be you have this house, and then maybe in later, and it will be the price will be raised. It's a natural, right? It's not on the like common enterprise, and people are on the expectation of the other parties effort to get the return. So in that case is it's a monetization, just you on a money through selling of your NFT. But if you think about this NFT as a vehicle for fundraising, and then a lot of you ask about a lot of people to join this as a fractional ownership, but under expectation that they will own this as a fractional owner, and then you have effort to build up this real estate in the future is more profitable, and they will get a return. It can be security. So it's very unclear, because depending on how you like utilizing your like tokenization. So you need to be very careful about if you think about it is like under securitization, and then if it is a security, then you need to like a compliance of the regulations. So full compliance is very heavy. So usually they taking the, for example, real estate, like they taking the like exemption under SEC law. They usually call like a regulation A, regulation A plus, regulation D, regulation S, or the crowdfunding type exemption to make easier for this like a registration state. But otherwise, you have like a just a blockchain P2P. Yeah, you want to just sell your house or your real estate NFT. You don't worry about it, but you think about it can be like in the future, and you want to fundraise, and you should be careful about whether it's a security. Then you need to consult the lawyer, not me. I'm not a security lawyer. But anyway, that was my general comment. Okay, so
thank you so much,
yeah.
Alex. I really appreciate that. I just to kind of follow up what you're saying is that that's exactly true. I know that there's some questions in the chat about valuation and due diligence and things like that. But as far as the raising capital, everything that you would do traditionally in raising capital to stay compliant, working with the SEC under an exemption A, D, CF, that you are doing that, we are doing that compliantly inbounds in a traditional manner, right? And then on top of it, we're tokenizing those shares, which is providing an added benefit to the investor, right? And to the owner really of the asset. So when we talk about capital raise, and I say it all the time, nothing is different. Obviously there are some differences, but in the way that we're going about that process, it's traditional, and we're staying compliant with the way that securities are structured today.
Mhm.
And that might change tomorrow, but today we're working in within the lines of that.
Additionally, actually, there is some interest topic is real estate. We can talk about real estate. It's a very interesting asset. But recently, I gave a talk about like because you know about the metaverse, right? Because metaverse is a virtual space, is twin with your real space. Actually, you may heard about like there are a lot of virtual land there, but recently actually there was I have several projects actually requesting about to develop the virtual real estate. It tied with the real estate is a twin space. And then, for example, that the one actually the project is going on in South Korea. They want to develop some of the like land space, like some place they want to develop in the future. But they want to show the like what will be the picture of their future. So they want to build in the metaverse virtually. It'll be linked with their future development. They want to like finance it, right? And then this will be good case actually that this metaverse will be introduced. What will be your future you will share in under development or something like that, and that they can finance in the virtual and real space. It's a new topic, but it's possible. So yeah, but we cannot talk more. But anyway, because real estate is really fantastic topic. We can talk more and more. Okay, so yeah.
Should we answer the question? Go ahead, Jeff.
Yeah, Jack.
I was going to say one of the things that you raised, Alex, is that one of the biggest challenges in terms of tokenized assets or otherwise is really that perfection of security interest. And so that is one of the things that I think that both from the legal and accounting framework and regulatory framework that people are working on to ensure that you don't have conflicting avenues of ownership for assets that may be placed on chain. And subsequent to that, really the on-ramps and off-ramps are part of that in terms of having on-chain capital that is readily accessible or readily deployable, for those assets that are on-chain.
Mm-hmm. Yeah. Okay, so I will finish up my topic briefly, and then we can talk more in the discussion session. Just to share my screen first. Okay, so what I'm going to talk about is the intangible asset, mostly that I'm a patent attorney actually. So I'm having this IPV because Jeff talked about IPV. He gave a very good introduction about what the IPV now trying to do. So I'm not going to talk about detail of IPV, but generally why we think about intangible is important is one of the good spectrum of this part of this like asset tokenization, because of this characteristic. Because for example, intangible asset, as Jeff mentioned, is 90% of the S&P 500, but it's not captured in the traditional like your financial like reporting, whatever, right? Is you never seen the like some reporting for about intangible asset valuation in your 10K or whatever, right? So this is hidden valuable asset, and then it will be revealed until certain time. I will show you this case. It will leave you the value until the final time actually you're bankrupt, right? This is one example actually that I'm working on. Because, for example, like there was a Nortel, was a big giant in telecom, is a bankrupt, and then what happened? There was a like the price of the M&A deal, that the asset value actually the heavily counted was intellectual, especially patent, not other asset, right? So they have like a factory, equipment, technology, whatever, but was a patent that actually is most valuable one, right? But it never revealed in the traditional like financial report. So this is the important thing. So this is show that, for example, you know about Motorola. Is Motorola also like a sold to the Google, and then the total valuation was a 12.5 billion. But you see that. So what happened is a patent actually most of that, right? 9.59 billion in total of 12.5. So it wasn't revealed until it bankrupt, and then it sold out to other company. So and then even the startup, like for example, like there was a Nestle was acquired by the Google, you may know about the smart home. There is a thermostat, you control your temperature of your room. And then what happened actually, the realization of this intellectual property asset value is most significant in M&A deal. So this is why that this is hidden value, but this is a huge value in like embedded in your company asset, right? So that means it is a huge potential, can be monetized, can be financed, right? So that's why that I'm focused on this one. And the IPV solution provide only part, but I'm more in general. So I actually I work on, before I work with IPV, actually I have like a focus on this topic for several years, and then recently I filed a patent, and I designed some architecture of the scope of the whole, how actually the utilizing this like a valuable intangible asset to finance and monetize. So I just showed that patent is a really good financial resources you can leverage in your company. And then you can use it as a traditional like NFT, and then you can monetize through the NFT licensing or the selling out. But additionally more, you can fundraise through the STO, whatever asset backed like token type of the borrowing from your like a bank, or they can be utilized in many other ways. For example, the WIPO is an intellectual property office in global like organization. Actually, they recently published an article about like report about the intangible asset finance, and then they focus on this is a little bit valuable, but why it cannot be utilized in frequently. And then they focus on what is a problem and challenges and how can overcome. And then Jeff is author of this intangible NFT. He mentioned about it briefly. Actually, he also like raised some to talk about that this intangible asset should be, we need to think about it. And recently there was an institutional DeFi, and a lot of people are trying to tokenize, and then they're utilizing this one as a DeFi. As an institution does not mean it's a regulation comply, is institution mean that like a more security measure to like can be utilized in institutional level. So this all combined as like a good signature that in the near future, this will be focused on more from the other like a financial like expert. And then I'm traditionally IP attorney, and then I have a lot of experience, traditional way to like monetize of this important asset. I know about what's the problem or something like that. And so one focus that what IPV is a valuation, because valuation is very important. And then whatever you want to do finance, whatever utilizing, monetize, you need to know about the value. So, but the most hardest thing is that because they are not revealed in traditional like a financial reporting or whatever, so there is no well-known way to value this intangible asset. So it's hard. And then IP is providing this utilizing the AI power like the solution to evaluate your like a patent value automatically. This is one critical point you can look at it. Okay, so I'm done. So stop sharing. Okay, so we have like actually the initially I said like we can finish up at 1 p.m. but we don't need to do so. As far as we have a discussion, and as far as we have a question, we can talk more. Okay, so is there anyone that actually I need to look at but I think the better way is to you can raise your hand, and then you can actually give your question, and then particularly you're interested in some specific speaker, and then you can ask him directly. Okay, so is there anyone who wanna talk about it or mention it? Because my discussion topic is not the panel discussion type. to we only talk because we want to share with you, and then I want you to share your insight or whatever to discuss about it. Okay, Tom. Hi, Tom.
Hey guys.
Thank you.
Hey guys. Hi. How are you doing?
Fine, thank you.
Thanks so much. Thanks so much for putting this together. I appreciate it. I'm a software architect who is working with companies, helping them adapt to Web3, blockchain, and other emerging technologies. I think tokenization as well. I'm hook, line, and sinker on the potential value of it and how it's going to change a lot of the economic landscape. My question is for Laura. I asked it in the chat, Laura, and I think you answered it briefly, but it is with respect to real estate. And the question is sort of on how do we perform due diligence if we're doing tokenized real estate? And I think your answer was that the same old way, nothing has changed. And I'm wondering, what are your thoughts on how, sorry, I misinterpreted that. With the SEC, so with respect to securities, nothing has changed. But with contemporary ways of doing due diligence on commercial real estate, it's different if it's a security, right? There's more rules. And so what are there are differences between the contemporary way of doing due diligence on a commercial property. For example, I'm not that interested in residential at the moment, versus the securities path, the security token offering, or even not doing a security token offering, just do a distribution to current investors after you tokenize the property. So I want to know if there's a way using blockchain technology and NFTs to host information about the due diligence documentation to allow investors to invest. For example, I don't want to invest in a property on the West Coast because I can't go there. So how do I get confidence in the way the property is being managed, the cash flow, the basic the balance sheet, the maintenance procedures? Are those things being brought into the filings, the security filings, from your perspective?
Yeah,
and what do you think is going to happen?
Yeah, absolutely. I mean, that type of due diligence, it would just be like if you were going to make a traditional investment and you were going to do due diligence on the owner or the issuer of that offering, you would do that the same way. The difference is that tokenization is going to add the benefit of transparency, security, efficiency, those kinds of things. But in terms of the deal, when you're going to vet a deal, you're going to vet that deal just like you would any other real estate deal, whether it's tokenized or not. It'll be the same.
Okay. Sounds like there's an opportunity there too, right? We talk about the streamlining the other parts of the process, keep them, maybe even reverse the order in some ways, rather than have the deal be cut and then go do all the due diligence with inspections, et cetera, financing, et cetera. It might be that the due diligence path can also, I'm sorry?
You're talking about residential or your commercial?
No, commercial. I mean, there's, yeah, well, I guess my experience is doing residential. That's like,
okay, you mean transferring the property as an NFT? When you're going to buy the property as in its entirety, a commercial property in its entirety?
No, I'm not talking about that. Maybe yeah, I guess I was speaking out of my own personal experience because I have not bought commercial property. My question was that, there must be some additional efficiencies or transparencies that can be added to the process where the due diligence documentation, not just the legal structure documentation, those types of filings, but also ancillary documentation about the qualities or the characteristics of the project. Because if you're going to have, as your example showed about the Aspen Hotel, if you can boil it down to 200, go from 18 to 200 investors, I would say that it would be difficult for those 200 investors to all do due diligence before they buy some of those tokens. There must be a way of having a package of quality information that describes the full operating, like what it would be a K, a K10, a KQ, something like that, that would provide deeper information about the characteristics of that commercial property. Maybe I'm not being clear. I'm not sure I
Yeah, I
am.
mean, I think the way that the way that I am understanding it is that it's all in the operating docs, your subscription agreement, your, if it's a PPM, all of those documents are available to any investor before they invest. So
Okay,
they would be able to do due diligence through those documents.
okay,
In
all right.
terms of qualifying data, there is technology now, just kind of on a different note, AI technology that is validating data. So when a building is being valued, right, the valuation of a building, there's technology out there that brings in more than just the market value of the building, right? It's going to bring in all the aspects of valuation using AI technology and making that very easy and provable. So in that regard, yes, that's happening also.
Okay, interesting. Thank you.
Yeah.
Thanks so
And
much.
Yeah, my pleasure. I'm happy to have a conversation offline too, if you have more questions.
I appreciate that.
Yeah, Tony had a really great question about, do you see a day when we can own our home online at the same time and at the same location that you live in it? So Tony, if I'm right, I think you're saying, is there a way where you can tokenize your home, and maybe you can just clarify the question, but tokenize your home and still live in it?
That's correct. So I own the home and then I go online and I purchase the same exact parcel. So I'm a little unclear maybe on real estate online. It does span the globe and they create these parcels you can buy, correct?
Correct.
And so can it pinpoint my home like Google Maps or whatever, and I can purchase that, have the same rights to that property online as I do offline?
So yes, you could go, there are providers out there that will create an NFT, a non-fungible token for your home, for you to do that for your own home.
So I was thinking back to when one of the speakers talked about how she was, people go visit it every day when you buy it online, and they actually would go look at it, what they purchased online, the real estate. And I was thinking, if you own the same home online as you do offline, it would add that much more vigor to the interest of online real estate. And I'm a little unclear. So do all real estate you purchase online have to be NFT related? So I got a little piece of, there's one real estate app out there where they gave me like a piece of land. I don't even know where it's at. I forget the name of the app actually. So I'm thinking, is it, it's not NFT related. I don't have an NFT for it, but it's just, I own this little piece of plot, do you see the future all going to have to be NFT or tokenized?
I mean, personally, I think that everything in the real estate space will be tokenized. Okay. I'm not sure when that's going to happen, but I sincerely believe that will happen. When you have big players like BlackRock leaning into the technology, a company that has every single resource at their fingertips, every means to be able to vet and learn and do any kind of education around the topic, and they're leaning into the technology. I mean, I just see that everyone at some point is going to start to understand why, Larry Fink is, saying this is the future.
Right.
And I think what you're referring to might be metaverse property, where you go on like SuperWorld and you can go in and you can buy a parcel of land in SuperWorld. It's more of like a metaverse type of product. That's more of a digital real estate transaction that's completely different from real world application. So maybe
yours would be more smart contract related, for instance, with the deed.
Yeah, more blockchain related, where it's written on blockchain, recorded on blockchain, everything is captured and monitored and managed on blockchain for real world assets.
So, yeah, I worked at realtor.com for about 12 years. And then I spoken with Errol Samuelson with Zillow about advancing into metaverse and providing this opportunity for homeowners as an extra. And a lot of those guys, I think, are feeling that there's just so many other opportunities in real estate. The metaverse is not the future. I'm also under the impression, like when you see Apple or Zillow not interested in the metaverse or downplaying it, and then you got players like Microsoft and Disney that are jumping on board. I feel that the people who caught on to Web3 are good at are different players in Web2. Like everyone who's going to do Web3 development are not Web2 experts, in my opinion. They're going to be Web3 experts. The Web2 people are set in this Web2 world that they created, they manifested, and they're not going to be able to evolve. It's a whole different mindset is what I'm seeing in players. So for instance, CRMs like Oracle's huge with customer response or management, right? Systems. But the future of CRMs is going to be much different in Web3 than it was in Web2. So you're going to see Oracle, in my opinion, kind of like if they're going to be pushed aside because there's going to be different players with different technology introducing Web3, blockchain, and metaverse. And I'm seeing that with real estate maybe too.
Yeah, I would.
That makes sense?
Yeah, I think that there's a lot of players. I would almost bet that every major player out there is exploring blockchain in one way or another, whether they're doing it privately or publicly. There's no way that those companies are not figuring out what everyone else is all hyped up about. There's the banks are using blockchain, right? There's all this infrastructure behind the banking system that is in existence now that they're not publicly. So there's all kinds of things. I think that's what I think. I mean, Alex and Jeff, you might have a different opinion, but I think everybody that is anybody is exploring this tech right now.
Yeah, so the metaverse I'm working to design has to do with cutting down, reducing recidivism, 25% globally. And what we'll do is send a hologram into the prisons, and it would educate these guys before they leave prison on what's like to be interviewed, talking to people in state agencies, using ATMs. So they would be more, the inspiration came from Shawshank Redemption. And so I'm wondering if there's a way we could, now I'm gonna have an NFT that's like a one-stop shop for design creation and then patent, trademark, and then be able to sell, barter, or trade, for instance. And I'm just wondering with real estate, if that could be expanded somehow as well, as far as just introducing. So I'm a little confused about the real estate digital wise and NFT wise. So the NFT wise, it would still be in the blockchain, but the digital one is not, is what you're telling me.
Well, the NFT is tied to real world assets. So it's tied to, I can go into Super World right now, which is a, metaverse product, and I can purchase your property in the metaverse right now if I wanted to. Right. So it doesn't necessarily apply to real world, right? It doesn't mean I own your parcel.
Exactly. Okay. Now, thank you for explaining that. I was a little bit lost there. So I appreciate your time there.
Yeah.
And that's pretty much all I had.
I think one of the most, I think that one of the most important things to think about as well is not to conflate the asset or asset values with what's actually being contained on the specific hashes. Right. At the very end of the day, whether it's a financial asset, a intangible asset, something that is subsequently going to be valued and monetized, it's about the data. Right. And so the blockchain is, really the vessel or the vehicle, or that particular hash is the vessel or the vehicle in which the data is being, carried. And of course, the valuation and monetization of those assets will be carried by that, particular hash, on the blockchain. And before we get to the point where we have these, super complicated and complex business models that are built on, what can be, We have to get businesses and enterprises to what, what is and what could be, right? It's a walk versus run, type of evolution. And while, many innovators would like to see us go from 0 to 1 immediately for large entities like the Oracles, the NetSuites of the world, which I do believe that, ERP and CRM will be changed. Won't be tomorrow, but it
Right.
will, they will change eventually.
3 years. Mhm.
Jeff,
I
I think that because it is difficult to host Jeff again, but he is a global leader in this space. I have some specific question, maybe interesting to other people, because about the reason of the SVB problem, right? Because what happened was like a government a standard interest rate raise, and that there was a problem with a security. They have it's a bond, right? It's a fixed income is a security. And then Bragg CEO mentioned about in the future of in the finance is a securitization of a security, right? So do you think about it a little bit different? Like for example, is a security of a security of a security is a common place. We have a token security, and a lot of people actually they have a bank have a reserve their token, the security token. And then they want to utilize and I think there may be some situation where it changes, right? If they will fail to to monetize this one. So what is your insight about that?
Absolutely. So, conversations with some of the financial institutions players I've spoken with are that the single biggest, investigation point they're looking at is actually tokenized deposits. And so understanding, what, would represent that dollar, that fiat that's in your bank account, and having a digital representation of that on chain. Other competing, what I'll call competing or alternative, sources of that may be things like digital deposits, or anybody that may have a store of treasuries or high quality assets, right? That they could then create a coin or a token based off of those potential reserves. And of course, everybody perhaps knows about CBDCs and how programmable money, or what are the pros and cons about that. And I think that at the end of the day, in order for a world to transact in tokenized assets, you also have to have the tokenized liabilities or the on-chain liabilities there, to facilitate and ease the on-ramps and off-ramps. I would posit to say that, it's more difficult, or it is a UI or UX challenge for a lot of people to bring fiat, on chain, and then decide, okay, which of those chains actually hold the assets that I want to invest in, right? And so again, going back to the walk versus run, I think that that's another piece of the puzzle that also needs to be solved for or determined for as we get to that point. With respect to security, or the security of those liabilities or those deposits versus the assets themselves, I think it's I think that technology will not be alone, or you can't utilize the technology or depend on the technology itself to prevent, those types of activities. At the very end of the day, if we're talking about free markets, capital will flow, to its paths of least resistance, and to have a system that's built for that. It's not just the technology, but it's also the regulatory and legal environment around it, that enables that or allows for that. And of course, building management teams, that can actually, manage those, that potential volatility or the speed of that volatility, which is very different, from 2008, 1999, 2000, 1987, et cetera, et cetera. Does that answer your question, Alex?
Oh, thank you very much. Yeah.
Okay.
Okay, so we cover enough, but is there anyone to have a question or comment? Anything you want to share?
Yeah, there's a question on the in the chat. There was a question from admin's iPhone asking, how does this technology tie into structured finance plays? At its simplest form, if you think about the waterfall in a structured finance deal, That waterfall dictates the priority of payments, the potential triggers that may occur, all of those things that are actually memorialized in the contracts or in the deal documents could also be, created by a smart contract. And, in a lot of ways, that is the beauty of, the tokenization or the DLT and blockchain capabilities, especially being able to codify, that waterfall and those stipulations that occur, within the existing, kind of structured finance deal documents. Laura, if you had anything to add to that.
No, I mean, I mean, exactly what you said. I would hit that right. I'd stay right on the nose with that, Jeff. I'm just sitting here like nodding my head saying, yes, exactly. 100%. Yeah.
Tony,
Oh, what's that?
do you have anything to add on?
Bear with me here.
Mhm.
I do, but don't. No, I don't. Close. There we go. I'm back. Hey, thanks. No, I think what Laura explained helped clear up in my head what was happening with the difference. And Jeff, I'm a little unclear. I jumped in late into the meeting, so I do apologize from the perspective you're coming from. So I'm trying to catch up to your whole dynamic there. And so I'm just playing along. I'm just appreciate you guys' time and thank you for your answers. That's pretty much all I had as far as real estate NFTs go. I just think you could turn your home into an NFT, and then that would allow the dualization. I'm thinking, you know what I mean, owning it online and offline. Like if you had a great mansion or a home that, like in the Arizona Biltmore over here in the Phoenix area, something that looks like buildings from 1776 almost, and you could make that into an NFT, put it online. And so when you sell, like with any other tangible asset NFT, when like you can either pass along the home or actually keep the home, and the other person can just own the NFT portion of it. Or you could sell them both and they would both go to the new owner.
Yeah.
As you could with an NFT, right?
Yeah, I think it just depends on how the NFT is structured, that what the rules are, so to speak, right? If I possess the NFT, then what is it that I'm entitled to? So if I'm entitled to live in that home, or if I'm entitled to make decisions about that home, if I'm entitled to transfer that property, and you're allowed to stay in there or not.
What I'm thinking is, I'm sorry to interrupt you, go ahead.
No, those are the kinds of things that would be, important to know.
And do you see a day maybe when the NFT is going to be more valuable than the actual property?
Well, I think in real world assets, the NFT represents the asset. So I think it's just really more of a vehicle to manage and transact and keep track of, and especially with things that are happening in title insurance. And I should say, I want to say the statistic is that less than 2% of policies in title insurance are executed. So there's this massive thing happening in title insurance that has been happening for a very long time, that you have to consistently, every single time the property transfers, get this title insurance. And there are those that can forgo that title insurance, but the banks aren't allowing that right now. And that, those kinds of things that are tying you to that process, where blockchain can solve for a lot of that, and it's just a matter of time. Yeah.
So Atlas Earth is the parcel, I mentioned it in the notes there, not Super World. Do you see digital wise, one's better than the other? Getting off the NFT subject, but digital properties, do you see how many players are in there that you prefer?
Yeah, no, right now I think the metaverse sector is very interesting. I think it's very, my personal opinion is that it's very speculative, that there's a lot that's happening in there that is going to work itself out eventually. and what the actual true use case that will apply to the real world, where there will be value in that. We are seeing some things in music, in the music industry, in right now with metaverse. That's very interesting. But I'm not really sure, personally. I stick to, real world assets and a very practical application of blockchain for real estate right now.
Because, music wise, the tickets, everything you sell could be an NFT. And I'm wondering how come these bands aren't making figurines of themselves as NFTs and then selling those to their fans. And then they could watch them jam.
Yeah,
That's just my thought on that.
Yeah, it's Canary. I want to say, if you take a look at Canary, what they're doing, really interesting music processes and the metaverse, and working with huge artists to produce events and experiences in the metaverse for fans. And I think that's going to be a pretty big deal because a lot of the demographic, right, the target audience for that is millennials and the younger generation, who are very much tied into this experience of an online interaction. So
once you buy a ticket, it's like an NFT, and we all used to save our ticket stubs back in the day, a lot of us, to the big game or the big concert, our first concert. And I'm just seeing that this goes back to, we're not doing anything different, we're just doing it differently.
Yeah, I would agree.
Okay,
A different way to say it.
Yeah, I think that it's almost time. So I want to have a final, just one comment from Jeff and Laura about tokenization, and then I will finish up today's webinar. Jeff, do you want to share anything?
Absolutely. Alex, thank you for inviting me to speak to your audience today. I do believe that tokenization is revolutionary in ways that it applies technology to some of the concepts that have been implemented through financial engineering. It allows for efficient origination. It allows for access to alternative asset classes that may not be able to access capital markets, but there are structural challenges that we'll need to overcome before it becomes truly widespread. And that includes, things like the legal and regulatory framework to support tokenized assets, the ability to bring fiat on chain more readily or more capably. And lastly, it's really about the education about not just the underlying asset classes, but also the use and the capabilities and limitations for blockchain and the tokenized world.
Thank you.
Laura?
Absolutely, Jeff, you're so insightful. I think that's right on. My opinion is that it all comes down to education, and I really appreciate, Alex, what you're doing in educating your audience, and I appreciate being here and being able to participate in education. I think that every time I attend or participate in an event like this, I'm constantly learning. So I appreciate the opportunity to learn from all of you as well.
Thank you, Laura. Okay, so thank you for everyone about stay for a long time and then share your idea and your comment. So as I told you at the starting that I'm going to share this recording, and hopefully we can organize more wonderful meeting, including Jeff and Laura in our future webinar. Okay, so thank you to everyone, and then have a nice day.